Hey everybody, Peter here, Forte Trader. Good to be back in town. It's Monday, February 25th. A question came up from somebody asking what all my lines are, which obviously is my support resistance lines. I know that was not the question. In fact, it was more like how do I get there and how I'm drawing them and what I'm doing. I decided to make a video for YouTube and all you watchers out there that are trading, and everybody has for the most part, pretty similar support resistance lines. There's nothing too perfect or too accurate in this world of technical charting, but I'm just here to share the strategies I use to create them. I obviously show this in my boot camp as well, but I also show many other things in my boot camp. I show how to do commodity spread trades and such. Today I'm going to show it on some basic Forex example, and then show a couple, maybe a commodity and a stock or two that I'm trading, and how price bounces up and down off certain support and resistance areas, what time frames I use, and pretty much we'll go from there. All right, so we're talking about, support resistance, and what is support? Support is areas where buyers take control over sellers. Sellers try to run a price down to a level here, and buyers take control and turn the price around and change the trend to the upside. And on the flip side, it's resistance, where sellers take control of buying. Buying is taking a run up, and sellers have control there. That's a resistance line. And resistance lines and support lines obviously are broken over time. Trends change and break, headlines and stuff. If it's a stock, it's an earning report every quarter that may change completely and gap things in and out and break out of price, as well as headlines. We're looking at a crude oil chart, for example. Like today, we had a major headline, which was just a simple tweet. I'll talk about that later in this video. Or fundamental news. We're in a stock right now where we had a great earnings on Thursday, February 19th, and over the weekend, that company had a very big accident in the air. It was an airline, and they were shipping cargo, and they got in an accident, lost a few lives, unfortunately. And what did that do to the price? Because again, markets are about investors, fear, greed, and all that, etc. All those emotions. There was a 6% sell-off in that stock today. We're going to look at that later and look at how similarity it works with technical trading. Had you not known anything about the news, we could have called it a gap fill. But interesting how things sometimes work almost correlated. You could have went on the fundamental way or technical way, and it almost seems like either one was going to do it anyway. Something along the line there was gonna go your way. But with support and resistance, it's a complete technical view of price. And with myself and a lot of traders that are swing trading, we're looking at really big macro time frames, which is where a lot of big institutes also are looking and making their moves and positions. It takes them a longer time to make these moves because they're playing with a big volume, big amounts of money, and so prices will tend to really respect these higher, or what we call macro time frames. Macro meaning what I'll use is monthlies, weeklies, and into dailies. I'll take my swing trades off of dailies, and as of this moment, I really don't take any trades off of anything intraday. Intraday meaning anything shorter time frames, from 4 hours to hours and 15-minute, 5 minutes. I'm not really doing anything like that any longer. It's been a long time. I'm swing trading. I take my key entries and exits out of dailies, and I look at all my lines that are drawn off monthlies, weeklies for the most part. Okay, well, we're going to get into that. I got a few other tips and tricks that I've built over time, one from one of my best technical mentor and friends, and another from a few other people out there that I've just compiled and kind of created my own little way. But for the majority part, I gotta thank my technical mentor. So big shout out to D. David's Trading Education out there. I've learned over the years a lot of different things from a lot of different people, but only a couple I can really give a lot of credit to that really enhanced my skill and honed it in and kind of honed me in as a mentor, brought me back into things that are important. Now, sticking back with relevancy, guys, sorry for that. Anyways, so what we're going to do here is I'm going to start I'm going to start with what's called a top-down approach. Most of you have probably heard that. Maybe some of you only have heard that, but a top-down approach is kind of like a picture looking at a Google Earth map and how you start zooming in into an address. You know, you're looking from far away and you start zooming in and zooming in and zooming in closer and closer. Um, I kind of came up with that theory like a little while back, and it kind of paints a good perspective on what a top down is. We're gonna look at the highest time frames and come down slowly into the shorter time frames. And I do that real nice, quick, and simple. I don't waste too much time doing it. You know, the most important thing to know and remember, and let me go ahead and pick up Euro USD here. It's a Forex. I don't trade it personally right now myself. I trade the futures part of it, the 6E. But what I want to pick a chart that doesn't have any lines and ignore the moving average at the 200 there. Stochastic. I teach people in my own boot camp what really this is and how I kind of look at it and use it. Maybe in the future I'll post something on it, but then in fairness to also boot camp members, I limit some of the info just because it's just fair, you know. And so the top-down approach starts from monthly for me, and one of the things is, you know, I like to look at candlesticks. To me, part of the candlestick theory is it gives me a perspective of what went on in that trading time frame, whether it be the monthly, weekly, or a daily, for example. It gives me an idea in that day who had overall control. Now, a typical candlestick, if you haven't read any basic books like from Steve Neeson, Candlestick Theory, you know, a candle has four parts. It has an open, a close, and then a high and a low. Now, although I don't use wicks at all for my support and resistance drawing lines, I do use them to just look at visually what's going on that day, who had control, who lost control. You know, so for example, you know, if we look at a candle down over here that I'm highlighting with my pointer, we can see easily that, you know, the market opened in one spot, ran up. Okay, the wick is where it went up as high as possible for that day, and then sellers brought it all the way back down, and it closed lower from its open, so it ended up in a red formation. You know, at the end, it made a small, tiny wick here. At the bottom means that buyers tried a little bit to hold up, but, you know, the strength was to the sellers that day. That's in theory a candlestick. That's how it forms from the open, high, low, and close, and that's what it looks like. But I look at that to kind of find strength and definition of what's going on for the day. For example, this candle, we can see that sellers tried really hard, but buyers really stopped, and it kind of opened and closed in the same price for that day, or that little body there. But it was a pretty aggressive day. I mean, there was some price action that day. We're just looking at a daily candle. If we broke that day, February 15th, down, you can probably see a lot of volatility in the Euro USD for that day. Okay, so per se, candlestick theory, I'm looking at it to define what happened for that moment, but not for my support resistance lines. A lot of people draw lines off these wicks. I don't. So what's my secret? Let's start with the monthly. And here it is real simply. People ask, how do you draw your lines? There you go. That's one of the best kept secrets. Why is because the key volume where there was context, there was there was dedicated, you know, there was volume accepted by both buying and selling for the majority of those days, is where these key turning points were clearly on line charts. So when I'm drawing my support and resistance lines, I like to look at line charts first, and I do them real quick, you know, especially when I'm flying through stocks to trade for options and my scanner is hitting a lot of opportunities. I'm pretty quick to drawing these things. It's just by habit now. I got it down that quick. Now, on a professional level, I'm a commodity spread trader. That's my forte. That's what I like to even teach people because it's safe, it works, it's consistent, and, you know, there's statistical edge along with it. So I do both. One as a hobby for myself. I mean, not really a hobby per se. I like to do it to make money, but professionally, I'm on a spread trader level. So next thing I'm gonna do, anyways, as I come up to my daily, monthly, I'm going to get my line, and I'm going to start with red lines. Okay, so let me default this real quick here to just like a red line. And just the key turning points where there's points, I want to just go ahead and click real quick. Nothing too fancy, nothing too perfect. as you go through them, you're going to see into the later time frames that it connects a lot with prior areas. Okay. In future areas, when you go in the past, this is all I'm doing. Kind of like that. Done. And once I'm done with that, I'm going to put my candles back. You keep, okay? You see, let me zoom in a little bit here. You see how here at these levels, some of the wicks, it crosses over. There was areas here too. You see that automatically where there's the close of these bodies or the open of these bodies. Same thing here. It kind of ignores all the noise of these wicks. Now, so again, in theory, when I'm looking at price action, what I did that day, I'll look and pay attention to wicks. It'll help me make a good decision on an entry or exit. But for support and resistance lines, I'm looking past those wicks. I'm drawing those line charts and then see how it just draws over. It ignores these noise. So it shows me key points. This is a very, very good strategy, guys. A tip to remember. A tip. Make that a tip. If you got anything from this video, this is a pretty good, important tip. I'll go next to my weeklies and same thing. And sometimes this becomes so good and clear that what I end up doing is I don't even really draw much on dailies. Okay, so on the next one, I may go and you'll see if it's a very price action respectful charts, kind of like especially like Forex and commodities, they do that a lot. You'll see a lot of the areas too on the smaller time frames being respecting the higher time frames anyway, so you don't have to overwrite those. Just change your color on the weeklies, in this case, for example, to something else. In this case, I'll use like a bluish color, and just make sure you get your new areas now, your turning points. You don't have to overwrite the other lines on the areas that have already been drawn on higher time frames. Okay, something like that. If this all is making sense. And then I'll just go ahead and turn that back into my candlestick. Okay, because again, I like to use those in different theory. But as you see here now, you see how these levels were the turning points that were drawn and how it ignored the wicks, right? We didn't see those in the line chart. That's the biggest takeaway I want you guys to make out of this support resistance video. This is pretty vital. I use this in a lot of my commodity spread trades, especially crude oil. And I just did it in a video I put up on last Thursday. I'll show you guys here what price did as it diverged short into today. And we can go and blame that on fundamental reason too. It's funny, I was at the gym when I saw the fundamental reason, and I made note and took a photo of that on the TV screen at the gym. But let's continue now and look at a daily. And I'm going to go ahead and cut the video a little bit shorter and not get too much into going into dailies. You can do the same thing. Okay, you can go turn that into a line chart. Okay, and then make a new color and follow through your lines. But you're gonna you may have a lot. Okay, so what matters more is the monthlies, the weeklies. Of course, then you want to top off your dailies. You'll find that a lot of the turning points on the dailies, again on charts like this, they end up having the same support resistance areas almost. They respect the higher time frame. They have few little turning areas here. You can draw a different color here, maybe perhaps a green, but I'm going to skip that part down for the video's length's sake. Okay, as you see that. I actually like that candle trend candles there, but let me put my candles back. And that's how I pretty much come up with them. As I zoom out, it starts looking a little funky, and people, I've heard people out there say, oh, this is just a messy way. It's not really that messy. This is a very macro time frame. These are very important key level areas. If you don't know them, if you don't draw them, then how are you going to know how important it was? Some people say it's too messy. They make less lines. That's up to them. That's fine. That's whatever they wish to think. This is what works for me. And I only tend to show people what works for me. That's what I'm going to share with the community. If it doesn't work for me, why am I going to share it? So this is what works. Look how clean Euro USD breaks down out of prior supports, becomes new support, resistance in most parts, right? Classic work. Support. How many times does support work? How many times resistance work? It breaks down now. Support classic becomes resistance. Support resistance, bouncing through. How much money could one have made in these areas? How much money could one have made? It's up to you. But you have more confidence when you understand this. And so, with that said, I'm going to get into a couple of key examples, and we're just going to call this video a basic support and resistance trading video. Crude oil, guys, on the video prior to this, Thursday, February 19th. I was traveling. I was in Virginia, and in my truck, I had placed a few trades. I traded a short commodity spread trade. Would have been nice to like just completely short this, but again, I don't trade big outright accounts, especially because I sleep at night with these trades. I don't hold any crude oil outright trades at night while I'm sleeping. I'm not that crazy, neither dangerous. But we caught a big time divergence sliding down over here, and we took this trade on right here on the 19th. Or was it? We were going up here. We were already topping off, and we got in a little bit early. And I got in early just because I spread trade these things. I'm not risking as much as what the actual outright does. In this case, for example, like today, you know, the actual crude oil made about $1.50 at some points, $2 move, complete from. Let's go here and look at this. Completely from the top of this resistance. We were just hitting this thing for the last couple of days. Boom, bam, bam. And we saw that momentum was weak and getting weaker. And, you know, this thing sank today. Now, we were already banking on resistance and that the momentum was failing up here, how I measure momentum. Email me and I can ask you. I can tell you how we do that. But momentum was getting weak up here. And we took our position in early, a little bit early, that's for sure. And it was safe when the market never even won against us, be exact with you with the commodity spread. But today we got a sick move to the downside. What could we blame it for? Well, if you're a technical trader, okay, you're here off of this resistance, is divergent, volume is getting lighter. And you can say it was a good area to take a short. It was perfect. A fundamental trader would say, well, that has nothing to do with that. Today, this was a big area where basically Trump tweeted again. And I talk about this in my spread boot camp a lot. In fact, I talk with everybody about this. This guy can tweet anything. And when, we hadn't heard about Trump and oil for months because his mind has been other places. His hands have been in different things. But now that he's cooled the table down with other stuff, he comes back in. And today, while I'm in the gym, throws out a tweet on OPEC again and just roars this thing down south. So one can say that, wow, the guy has a lot of control on that. Technical traders won't even watch news. They can care less. They would have been up here on the short side with the divergence to the short side. Momentum was weak, and they would have cleaned up shop today. Each one contract here would have made you about $1,700. Okay, so that was an excellent trade. For some reason, because we went so far out on our crude oil spread, we took about very small portion of that, probably not even 4%. And we've been sitting at that 4% since last week. So that's all we've been profiting on. We're still in it. We're looking maybe to the downside here, the support of like 54, just about $55, and we'll consider getting out. Depends on what crude wants to do this upcoming Tuesday. I'm going to make another video to show exactly how you can profit more from spread trades, and it's just how close you get to the outright months. For those of you that are familiar with futures, you probably know what I'm talking about. For those of you that aren't, you know where to go. There's a boot camp that explains all that stuff. Now, let's get on to the stock that I wanted to talk about. AAWW was a stock that I just got in on an earning play. There was momentum. It wasn't getting any weak to the downside, and I use a 200 moving average when things cross over there in that territory. And also, I'll gaze sometime quickly, maybe at a fundamental. In this case, I was on the go. I didn't care much about what a fundamental really was about an airline company. I kind of glanced at the higher time frame and see prices respecting the 200 a lot. So being on the technical side of things on this end, I like it. So I thought, well, I'll buy a longer term option on it. It was up that day 25%. and we did have a gap. So I was wary of that. A technical trader is going to look at this and say, well, I'm playing a gap down. Okay. Perfect call for those who wanted to take a short up there, especially when it was sliding short on that Friday or whatever, or that same day, actually, in fact, where I profited. Where did this go? 219. Well, got a little confused here, guys. I'm sorry. A little bit late in the day here on Monday, but I wanted to make this video. Now, again, I don't have support resistance drawn here, but I want to talk about a technical aspect that crosses with fundamental. We could have a gap fill. We can call this a gap fill for those technicals up there that say, hey, this thing's, it's going to have a fill because your daily had a big gap up from good earnings. Okay. However, from Thursday morning. However, what we want to be aware of is about this. Here is your fundamental. Here is where their market dropped back, gap back down into the fill. But why? Well, a fundamental reason could be because this airline just had a crash. They had a disaster. Atlas Air runs a lot of cargo, third party for a lot of big companies, including Amazon. 20 of their planes are allocated for them. Of course, I found out after the fact because I'm wondering, okay, this was a very fast gap fill. Didn't even take a small progression towards it. If it filled in just like that quick, obviously clicking the news here on the news tab, boom, we find out Saturday, one of their planes, they lost 3 people, rest in peace. It's sad for the families. They lost the plane out here in Houston, Texas, somewhere coming in from Miami. Then this thing dropped 6% for the day almost. So could it be a technical gap fill? Yeah. Could it be fundamental reasons? Yeah. So you pick your poison, I like the technicals on it, and I still would say that I am holding my position because I haven't hit an area yet where I'd want to call it quits. Risk to reward wise, I'm getting close, but I'd like to see what it does the next couple of days here. And if it falls through, hold some support. I haven't drawn my lines yet. I'll follow the same rules I did and I showed you guys on crude oil and the Euro USD. Same thing. You want to look at your monthlies, your weeklies, draw your key support resistance areas there, draw them off a line chart, then go from there. I also use other things, guys. You're probably looking at these. You're going to ask me about them, message me about them. I use other ways to gauge momentum in a particular trade. So to confirm or double or triple confirm my entries and exits, I try to look at a few other things. So it's not just one reason in. If I have 2, 3, or 4 reasons to get into something, 2, 3, or 4 reasons to get out of something, it works for me. It just builds much more confidence. It allows me to sleep at night, not care about these trades that are on, be pretty confident about them. If I lose, I just lose. That's just part of how this business works. And I win if I keep my winners outnumbering my losers, and obviously greater, then I'm doing pretty damn good. Since the last quarter of last year to now, we're doing strong. I like the 30% gains. I'd like to see more, or I'd like to even increase my own account size, which is my goal for the year. Another, again, not having to do anything with the video, but anything you guys want or request, let me know. I'll be more than happy to make more videos for you guys. I do show this part of my technical trading in my commodity spread trading course. I like to trade commodity spreads. Okay, I like future spreads. It works good with small accounts. It's more consistent. It takes a little bit of the volatility out of the market if you cannot afford the volatility. Okay? I'm not saying volatility is a bad thing, but if you can't afford it, there's ways to work around it and still be involved, engaged in these directions, directional biases you may have in something that's so expensive to trade. Okay, so we made a nice play here. We made a few bucks on crude oil. I would have liked to have made what the one short leg made, right, over the long, but that's what we do. We spread our trades. For more information, by the way, fortetrader.com. If you like the video and you're thankful for it, I appreciate it. Put a thumb up. Thank you very much. Subscribe for more updates. And if you do want different topics, anything that I can share, if I'm able to do it, I'll let you know and I'll put a video up. Okay. Thank you very much, guys. Have a good trading week out there and take care of yourselves.